Welcome to Lock In Your Success. We are the company that creates strategies to build wealth. This webinar reviews real-time hypothetical trades each week while analyzing market conditions with adjustments. Questions are always welcomed, asked, and answered. Before we get started, we need to go over our disclosures. Locking Your Success LLC is not a broker-dealer or financial advisor. This presentation is for educational purposes only. This information is not an offer to buy, sell, or hold securities. You shall be fully responsible for any investment decision you make, and such decisions will be based solely on your evaluation of your financial circumstances, investment objectives, risk tolerance, and liquidity needs. Please visit cboe.com to find and review the options risk disclaimer prior to placing any trades. Also, please note that these are real-time but hypothetical computer-simulated trades and results. The trades are believed to be as accurately presented as possible, however, they are not guaranteed as to accuracy and therefore live results may vary. No representation is being made that any portfolio will or is likely to achieve profits or losses similar to those shown. Whew! Now that that's over, let's get to it. Here is your host, John Locke.
Good morning and welcome to the Locking Your Success Options Trading for Income Weekly Update for November 30th, 2015. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs, and join our mailing list and get your free report, The 7 Secrets to Becoming a Successful Trader, and join our community to sign up for this free weekly webinar. And our website is lockinyoursuccess.com, L-O-C-K-E, inyoursuccess.com. All right, well, I hope everybody had a fantastic Thanksgiving and things are going well for you. A few announcements that we have coming up. Let me just switch forward a little bit. A few announcements that we have is starting next week. This webinar here, the Options Trading for Income live webinar, is going to be available for Lock Options community members only. The membership is free. Therefore, you can come on in and join up and just go ahead and do that. I just go to our website, lockinyoursuccess.com, go to freebies and more, and you'll see the Lock Options community under there, and you can sign up as a free basic member, and from there you can go in and actually sign up for the webinar here. So that's the first announcements that I have, so make sure you go ahead and do that. Also, we have our community coaching webinar this Wednesday at 9 p.m., so make sure that you submit your questions for that. If you have any questions or concerns that you'd like answered, then you go ahead and do that on the community. Also, this Thursday, I don't know if all of you are aware, but Sherry and I do this other company, Financial Freedom Classroom, and we have a webinar this Thursday. We have them the first Thursday of every month at 7:30 Eastern. And that's, if you want to sign up for that, that's www.financialfreedomclassroom.com and /free-webinars. And you can find out, you can sign up for that there. So that's another nice free resource that you have that covers stuff other than trading that has to do with financial success. So that's really great. We have not yet made announcements for Successful Trader, Options Trader of the Month. That will be made on next Monday. So that's essentially what we have going on this week here. And do you have anything else, Sherry?
Financial Freedom Classroom webinars, just the title of it is How to Be Nice to Your Christmas Budget. So if people are interested in that, that's what that's going to be about.
Right. Sherry's going to be speaking on how to save money, and she's excellent at that. So it would be a good one to see. All right, super. Is there anything else? Case when
maybe one more thing.
Yeah.
For those who are interested in the masterclass series, I believe that ends tomorrow. Is that
Oh
right?
yes, I forgot about that. Okay, so I don't mean to talk over you, I apologize. But yeah, while you're on our website checking out our trading programs, we have a new program that SMB released, Masterclass Series, which is on special for $1,000 off until, midnight tomorrow, I believe, December 1st. So those interested in that, then make sure you go ahead over there and check that out. It's, what is it, smbtrading.com/master, right?
Why don't you pop over to the website? Can you do that?
I should do that. Very, very good.
And then you can just show them where it is.
I'll show a couple of things while I'm there. So let me do this. I'll drag a new tab up here. And since we're here, we'll take a look at where you need to go to sign up for the new webinar. Freebies and more, Lock Options community. And just come down here. You sign up for a free basic membership, and that'll give you log-on credentials to get into the community, and from there you'll be able to go ahead and access the new Options Trading for Income webinar, which starts next week. And for the master class, it's SMB training.
John, there's actually, if you go under our programs, you'll find it right there.
Okay, so Sherry put it in here. So if you just come to our main website, lockingyoursuccess.com, and go to the home page. I'm sorry, from the home page, just go Programs, Masterclass, and that'll bring you, and then you can register here. That'll bring you over to the SMB site so that you get your special discount for that. Okay, so I think that's all the announcements that we have then, right?
I think we're all set.
All right, fantastic. So that's what we got going on. Let's take a look at the markets and what's going on with the trades. So here, oh, hold on, we may have a question here. No presents for me. I don't know what that means. Okay, let's go over to the market. Last week, we were talking about, or I basically said that it was pretty much a no-brainer that the Russell was going to make a shot for 1,200 or those previous highs. So it's no surprise last week that we had a decent up move and ran into that level. That was pretty much of a no-brainer call last week. This week's a little bit more complicated. We have the Russell, which did break out over this 1,200 area. Well, at the same time, we got the SPX that's lagging behind a little bit and having trouble breaking up over this 2090 area. We have the Dow, which had an up week but has reached very close to its previous highs. And we have an NDX, again, which is stalling underneath its previous highs. So what I was hoping for when the Russell came up to this 1,200, I was hoping that the SPX would be up, up at these highs here, which is, what, about 4730. I was hoping the Dow would either be here or would have broken up into here, so the Dow is pretty much in line. But I was also hoping the SPX would be at previous highs, which is around 2111. That would have made a call for direction fairly easy. The fact that that did not happen complicates things a little bit. It's looking more like the Russell's likely to come into 1210. And if I'm looking at the Russell by itself, that's a very likely reversal area where we'll pull off of that. We'll probably touch that area today. I mean, it looks like the futures are already up $5. Very likely it's going to make a shot for this 1210 area. And we'll have to see what it does off of that and what the other indices do. A breakout in the other indices is probably going to bring this to 1230. If, say, the Dow breaks higher and the SPX wants to make a run for around 2115, that'll probably bring the Russell to around 1230, and that's the more likely reversal point in that scenario. So it's a little bit of a tough call, other than obviously from the futures. At least we have some news coming out at 10 o'clock. At least until then, we'll probably try and go up a little bit. And from there, it's anybody's call at this point. But like I said, I would put a if-then scenario in. If the SPX and Dow kind of hold their levels here in the NDX, then the Russell's probably going to reverse at 1210 and reverse down to more likely around the 1180, 1170 area before it breaks higher a little bit later in the month or in December. So those are my initial thoughts on that. Let's see. So let's move on to what's going on in the positions. Let's see. Can I send a test announcement emails for next Monday morning seminar? Sherry, can you do that to make sure that people are there? Just a test announcement. She'll take care of that.
If they register, they should have gotten a registration email.
Okay.
And they should get reminders the same as they have for this series the day before and then an hour before.
Okay. All right.
So if you don't get that, then if you haven't gotten a registration confirmation, please send me an email at sherry@lockingyoursuccess.com, and I'll make sure that you get that, or we'll figure out how to get you on it.
Okay, super. So contact Sherry if you don't get that email. All right, and Ray said he did get his email, and I know some other people did too, so at least the system's working. So thank you for that. All right, let's go to our positions here. I'll bring up Option View, and we are back at last Monday. I'd like to talk about, let's see, first the December bearish butterfly. So let's take a look back there, because all our November trades obviously are closed. One of the ones we were hoping to close last week was the December bearish butterfly. If you remember earlier in the week, this was over our $5,000 reduced profit target, but we weren't quite yet at the point where we would pull it off. And of course, last week was a fairly aggressive up week, and we were not positioned well for that. So therefore, this drew down, and as is common with this type of position, it's not unusual for that. So there were no adjustments to this till Friday, and on Friday, which was a half a day, right? So let's move to Friday at noontime. Right, so if we pull Friday at noontime, we were here, and let me pull this off. We go to the T-log here, the 27th, right, 27th. We hit we exceeded our add point of 1200 here. And so what we did is we went in and we did the add. We added in the 1200 butterfly. Now, according to the guidelines, we have a delta limit on the bearish butterfly. When we're 3/3 in, even when we're not 21 days to expiration, we have a delta limit of minus 750. And when we added the last third in, that was exceeded. Therefore, we added the last third in, and basically the guidelines say in that particular situation to pull off our 1160s. In addition, we are technically starting to go into expiration guidelines. I'm not that concerned about making the drastic switch completely into the guidelines on the very first day. So therefore, I didn't go completely into expiration guidelines, but what I did do is I did do that add and the removal of the lower butterfly. So here, maybe I did it at 1230. Right, so here we came in, we added the last third. Our delta limit we were over delta limits. We pulled the 1160 as per guidelines, brought us down to minus 417. Going forward, we're essentially going to push deeper and deeper into expiration guidelines. So we're going to allow minus 250 delta to the upside towards the end of the day, and minus 500 intraday. Like I said, I gradually go over that, get into that over a period of about a week. So we'll be looking at that going forward. But as of right now, this is the position we sit at. We're basically break even. We may be up or down a little bit of money at the end of the day today, but all we're looking for is to pop this into a $5,000 profit and then move on. And those were the moves for that. Here is the T-log for that particular move here. So we sold the 1150s, we bought the 1200s. And that is that. As far as the M3 goes, let's take a look at the M3. This got, right, so I just had another comment. I added the last bearish butterfly, the last third of the bearish butterfly on Thursday, but didn't do the delta average as discussed, right? So we talked about the option view situation. If you're in the community, we have issues with option view. You can see that in relation with the T+0 line. So some people did not, in here we're not doing the delta averaging, but if I average the delta down right, this would have been just 3/3 in. However, you also have to take into consideration that we're inputting into expiration guidelines, so you might want to do that anyway. Why would I have not taken off some of the profits when the bearish butterfly was at 6,000? Because we are doing these by guidelines, and the guidelines do not say to do that. Yeah, so what we're doing with, what I'm doing with my live trades, I'm looking at the variable model, and I'm looking at the EI, OIO model and averaging them. So here, if you look at this bearish butterfly in that model, you can see our delta's down to 349, which is, the position looks like this. If you look at the variable model, which we've always used, which obviously is having an issue right now, is minus 416, and we're getting something like that. So we are getting a fairly good difference between those two models. The EI OIO model is not known to be very reliable either, so on its own. So I'm just averaging between the two. So yeah, we are doing that, but not on. I'm not doing that here. If you look at the live trade we're doing in on Options Tribe, not Options Tribe, yeah, but for Options Tribe members, then we're doing the averaging. But here I am not. So that is that position there. Looking at the December M3 trade, coming back to Monday, we'll show you our Monday position. Any news on the OptionView situation? No, I have not heard back from them. They're supposed to be, last I heard, they were supposed to have something out in 3 weeks, and that was 2 weeks ago. So I'm probably going to be contacting them this week to see if I can get some sort of clarification on what they're going to do so that we can start back testing everything and make sure that everything is lined up. There's no point in back trading this model because it's not supposed to be out for very long. So we'll see how that goes. All right, December M3. This was our position end of day Monday. So on Monday, and I actually did them early in the day. I think that was an error on my part. So Monday, I rolled my 1120 to 1140. So let's take a look at this. And I went back. It didn't matter. When I went in and did this, I did it at 12:30 because of the time frames that I had. And I went back and checked it at 15:30. It didn't really make any difference. So if we look at this particular case, this is the position we were in. We were in 1120 butterflies with 10, 1120, 1130 verticals. We had our long call on here at 1,000. We're here, we're positive Vega. So to make that correction, we typically do a roll up. So what we did is we rolled this to 1140, added 3 1140, 1150 verticals, 7 1140, 1160 verticals. Went in this, we're minus 61 delta here. Negative Vega near the edge of the tent, just about a perfect position for that. So that is the position we went into there. And then on Tuesday, we ran into a delta issue because the market went up another $9. And if we take this off, we were minus 69 delta outside the tent. So we made a minor correction by selling 3 1150, 1160 verticals. Put us into a position that looks like that. And let's see here, Wednesday, ooh, another one. All right, just constant up move here in low volatility. So let's push to Wednesday. I believe we had a volatility issue on Wednesday. Yeah, so Wednesday we went positive Vega. Delta's relatively fine, but we had a volatility issue, so I did 5 1160, 1170s. If I redo that, right, that brought our volatility down. Our delta's a little bit flatter than I'd like, but we aren't quite at a roll point yet. Here's what we look like on Thursday, on Wednesday, and then of course Thursday we ran with another up move. So if I come here before adjustment Thursday, I'm over 1200. Technically this calls for a roll up. My Vega numbers are very, very low. I think during the day these were bouncing around, but they were fairly positive, more than negative. So what I ended up doing is I didn't do a roll because it was a half a day, and I generally don't want to do a roll like that, that significant on a half day towards the end of the day. So instead of doing a roll, I just added 5 more 1160, 1170s here. So if we put this in, I went for, was that 5? Let me see. I was at 5 and 5. Oh no, I didn't do that. I did some 1160, 1180s and some 1170, 1180s to bring us to 8 1170s, 2 1180s. So slightly positive on the delta range, but solidly negative Vega. And I went to this position here. Now, my plan is today, unless we get a significant down move, is going to be to roll this up unless we move down. So any move up today, we're going to do a roll up towards the end of the day. I just got a question, why technically a roll up? Course says prolonged period over 10 points of upper long. Right, so that's subjective, right? So the course says if we're over 10 points over the long strike for a period of time, then we're going to want to do a roll up. The other thing we're also dealing with is a volatility issue. Without a move here, we're near flat volatility. We're near flat Vega. We're near flat Vega and we're near flat Delta. So there's nothing wrong. You could leave this here and still be within the confines of the class. In other words, you could leave this position without rolling up and still be within. Subjectively, you could argue that I should roll it up also. Typically, what's going to be the trigger on that, whether I'm going to roll or not, is what my Vega number is. If I'm early in the trade and I'm 15 points over my long strike, maybe even 20, sometimes I can hold a nice solid Vega number, and my delta's pretty much okay. Sometimes as we get closer to expiration, that's no longer the case. I start running into a volatility or Vega issues, and I start trying to correct those Vega issues. I start running into conditions where I flatten my delta too much, which is essentially what happened here. This is too flat. I probably shouldn't have done that. That was probably not the wisest move actually to do on Friday, but that's what I did, so we're going to run with it. But anytime from now, over the next day or so, it's technically, we're going to have trouble holding this Vega number here, and we're going to end up having to roll it up. So hopefully that deals with that. And here is the T-log right here. Okay. Actually, let me just, I'll back up some days too so you can see that. And of course, these will be posted after the trade's closed on the membership site. Okay, so that is where we stand with the M3. We'll see what the market does today, and that'll kind of define what we do later. The rock trade, yeah, so if the market goes up, where am I going to roll to? I'm usually going to put the long strike 10 points over the price. So if I was here, I'd go to the 1210s, but if we go up to 1210 today or close to 1210, and we decide to do a roll-up, I'd put the long strike at 1200, which would put my short strikes by default at 1170. Right, that would be a 30-point roll-up. Typically, that's what I'm going to do in this position here. Okay, so let's go back to Monday. We'll take a look at the rock trade for December. We'll go back there. I will switch the account over. So let me take the adjustments out. Here's our December rock trade. It was very similar to the M3 trade, except it was already rolled up to 1140. Right, we had already done the roll, or we entered the market a little bit higher. So we were already at the 1140 strikes. We, again, were running into a negative delta issue on the edge of the tent here. So I just came in and did a minor adjustment here, and that was selling 3 1150, 1160s. Was that 3 of those? I wrote down 3, but that may not be the case. Let's see, we went from -8, looks like I did 5. Went from -8 to -3. So I sold 5 1150, 1160s and just flattened our delta number out a little bit. Then I don't believe there was anything else on this until Tuesday we did 3. Tuesday, okay, so Monday we did 5, Tuesday we did 3. Monday, Tuesday we did 3 1150, 1170s. Okay, so we did 3 1150, 1170s. We bought 3 1150s. We sold 3 1170s. That's why that looked different. Let me just undo this. You can see the move there. We have that -3 at 1150. We got the -3 at 1170. Again, maybe mainly for delta corrections outside the tent. And then Wednesday, did we do anything Wednesday here? Nothing Wednesday. Friday, I ran into the same thing. It was a half day. I didn't want to do a major roll. I did 5 1160, 1170s. So let's just push into Friday here at 1230. Right, so we went from this position here. I did some 1160, 1170s. I also did some 1160, 1180s. We ended up with 8 shorts at 1170, 2 shorts at 1180. About -7 delta, about -10 Vega. This is due for a conversion over into a rock trade. Do I like that conversion at this particular point? Not particularly. And I'm going to let me talk about this and the December bearish butterfly as well. I'm going to do it because that's by guidelines. If the market's up today and it doesn't come down, if the market comes down, we'll leave it as is. But If the market doesn't come down today, we're going to end up converting this into a rock trade probably at 1180, 1220, 1240. My personal feeling is the market's probably going to have a temporary reversal. It's going to knock us back into an M3 anyway. We're basically at the exact same type of situation we were in last month. That's not a disaster. It's just kind of a real pain in the neck because you have to move things around a lot. But that's my feeling on it. But I'm going to follow the guidelines here. We'll do what we need to do depending on what the market does today. But just like I said, I'd almost prefer to wait this 1210 area out and see what happens. But those are my thoughts there. Also, the bearish butterfly, since I'm thinking the same thing, my tendency here would be to hold back on going fully into these 1220s and certainly rolling into the 1240s if it comes to that. I do still think that the market's going to run somewhere in the 1210 area, probably reverse, and this is probably, and I believe that this is positioned very, very well. Reality is I even preferred not to take off these lower strikes. But like I said, that's if I'm calling technicals and I'm doing that. But I suggest I suggest you just follow the guidelines, I guess. But or you certainly should, because you need to be disciplined. So whatever your plan was coming in to the trade, then you should follow it. So if your plan when you entered the trade was to just follow the guidelines, you should definitely follow the guidelines. My plan on my M21 trades coming into this was for the market to reverse by 1210 area, and I gave myself till 1220, and then I stop out over that at a small loss. So that being the case, then I'm going to hold a position like this rather than try and chase it. But again, that was decided prior to entry. If this scenario were to come up, which has a lot to do with proper trade planning and things like that, if your plan was to just follow the guidelines, you should just follow the guidelines. And if you're using these delta numbers on the variable model, then that's what you use. If you're using some kind of a combination like I am on most of my live trades, then you use that. But I was just kind of just going over that of what I like and what I don't like about that, just for everybody's benefit, and also talking about that you should follow your plan either way. So, and if you don't like your plan now, then just exit the trade. But that's what I have there. 1209.98 is the open of the year for the Russell. Yeah, okay, so we're completely flat for the year in the Russell. That's interesting. Thanks for that, Casey. That's interesting tidbit. All right, let's see here. Let's move to our next trade here, which is going to be our December V Condor. So our December V Condor trade had no adjustments and is looking quite nice, actually. So this is shaping up to be a nice month for the V Condor, should the market actually hold up here. Like I said, recently, or the last 2-month cycles, the market's been kicking right back down into the center here, which has been leaving us with positive returns but low returns. Should the market stay and continue to grind up at a more reasonable pace here, then this could be a very good month for the V Condor. But there have been no adjustments since entry, and that trade is doing extremely well. We have a January bearish butterfly to look at. So our January bearish butterfly, let's see, let me just take a look at what adjustment days we had. Wednesday. So let me go back to Wednesday. Switch over to our January position here. Right, so Wednesday afternoon, we are, let me undo the adjustment. We're sitting in a single butterfly at 1150. Prior to our add point of 1190, this trade actually had delta theta ratio issues. Now that wouldn't be the case necessarily if you were averaging your models, but like I said, this particular position we're not averaging the models, therefore I went by that. We had a delta theta issue prior to adding this when the market was at 1190. So what we ended up doing here is rolling and adding. So we took this 1150 to 1170, added, and 1190. If I said that right, that's where we are. 1170, 1190. We are minus 209 delta, minus 210 theta, and in a position that looks like this. So this is still very healthy looking, especially if we get some sort of a reversal at 1210. This is going to be a very nice trade here on this particular position. So that is the January bearish butterfly. So for T-log, that's what we have there. There were no further adjustments on Friday. For our January M3 trade, let me just switch over to that. Nothing happened on that trade on Wednesday, but this is what we look like on Wednesday. Here, again, we're pulling outside the tent. Friday, if we go to 1230, we did make an adjustment Friday. It's just very minor, I believe. Yep. So here we have pre-adjustment. We are minus 63 delta. We're clearly way outside the tent. Again, this may not have required an adjustment with averaging, but here it does. So I came in here, and this is where using the variable model in the M3 is going to benefit you with a grinding up move. So we came in here, we did 5 verticals, 1150, 1160, put us to minus 47 delta in a position that that looks like this. So that's how we went into the weekend. So that's the M3 position for, and here's a T-log for that too, by the way. That's our first adjustment of the trade. That's our Gem 3, and then the last trade we have on is a V Condor, which actually got no adjustments and again is doing quite well. If we continue to get a grind, if the grind slows down, if it continues at the speed it's going, we're going to have to buy back some of these shorts, and that's going to start becoming cutting down on our profits. But if it slows down a little bit, then that's looking fairly good. So no adjustments here. Here is what the position looks like. And that is all we have. And I don't know if we have any other questions coming on, but it doesn't look like it at this point. And so far, things are going fairly well. I hope everybody has an awesome week trading this week, and we'll talk to you next week. Make sure to sign up for the new webinar series. Oh, just a quick question from Casey Brewer. Under what scenario would I get rid of the extra butterfly and the M3 trade? I thought about getting rid of it last week. I'm definitely going to get rid of it if I have capital problems. So if I have capital problems, I'll drop my size down. So if I start doing verticals in the January M3 and I start having capital issues, I will certainly drop it out. I could have dropped it out as an alternative to doing this adjustment as well. Either one would have been fine. That's kind of subjective. I mean, there's two different ways of doing things. So certainly if I had to roll it, I'd probably drop it down. I would drop it down. All right, everybody, have a great week, and we'll talk to you next week.